Hi everyone, welcome. How's it going? We have just received our closing bell, so it is 1 o'clock on November 17th, Friday. We're going into the holiday weekend for the United States. So again, we're going to expect low volume, low participation in the markets next week, which means that we could have some large price movements. So normally when we have lower liquidity, we have heightened volatility. It's easier to push prices around. It's easier for large institutions and algorithms to manipulate the markets. So we're not going to get too excited if we start to see some weird directional movement over the next week, and we'll wait for the following week before we start deciding on direction. But in the meantime, what we're expecting is that chop sideways. So this morning we talked about how it was more likely that we are going to continue to chop sideways, and we had a slightly bullish lean in this morning's market. So let's see what actually happened. You can see that today, actually, for the most part, we did just kind of chop sideways. For the first half, it was below yesterday's close, and for the second half, a little bit more range, a little more movement. It was above the previous day's close. So we did end up slightly higher, but not significantly and not challenging the local high, the resistance right here. So let's see on a daily chart, we can see it just looks like we just went sideways a little bit. So nothing exciting, no movement, no pullback, no breakout. And this is probably going to be the case again next week because of the lowered participation. You might see little moves up and down, but again, we won't get too excited about it because it will most likely not be accompanied with any sort of volume. We didn't really get any volume all week, and next week we should expect probably even lower volume. On the QQQ, we were watching that very carefully because we said if we were going to break out today, then we would have a different story, that we would actually start to expect upward movement, but we didn't. You can see that very muted, very tiny range. After all of this excitement over the last 2 weeks, we're just consolidating sideways. So now at this point, even though I keep on seeing all these forces that are putting pressure on the market and trying to get it to pull back, this market has been incredibly strong and it's been resisting that. At this point on the QQQ, there's just not that much distance to the EMA 8. So pull back to the EMA 8 would be nothing. It would be basically look just like a chop sideways. So pull back to the EMA 20 or this previous high down here would actually be a little bit more meaningful in terms of pullback. But again, it's still not that far. If we look at the S&P 500, similar. It's a little bit further away from the EMA 8, but that more significant level is that pullback to the EMA 20, also this horizontal line, MA 90, where we broke out of previously. We gapped up and broke out of it. So if we look for a pullback, that's what we're looking for. It's just filling this gap, not even moving that much. So consolidation is the stronger, technically stronger theory, but I just keep seeing more and more. I heard rumors of large shorts in the bond market, which would drag the equity markets to a pullback. I keep getting signals, the same signals that I showed you yesterday, where I said, was it yesterday or the day before, where I just got so many bull notifications on my alerting service that I set up with my own criteria. That happened again today, although not quite. There were a couple of interruptions with bull signals, but for 99% of it was all bear signals. There's just a lot in this market to say, hey, we've gone up too much too fast. This is a little wild. We need that pullback. Earlier this morning, we were talking about how in 2021 we had a similar run up, and we just eventually had to get a pullback to that, the very least, that +1 ATR. But then after a little bounce above that, down all the way down to this -1, -2 ATR. That is what's healthy. That is what, even though this one didn't continue, but that's what's healthy, what's needed to continue on this bullish run. So maybe not all the way down to the -2 ATR, but at the very least to the EMA 20 is what we would expect for a normal, healthy, bullish run upwards. Otherwise, this is just going to fizzle out and just die off. So for now, but we are still expecting, so seasonality and the change of trend all point us to in the bullish direction. So we do want to lean to the bullish side, even though we are still somewhat anticipating the pullback. The pullback at this point looks like it would be very minor. So we still want to lean to the bullish side. Now, this morning I suggested if you were on the short side, if your portfolio is short, that you might want to balance that out, get neutral or slightly long. I spent my entire day doing that in the various portfolios that I manage. And I also took the liberty of, since we can't trade this as the weekend, right? And I wouldn't be able to actually look for a long to balance out the example trades that I've been showing you over the past week. I took the liberty immediately after the pre-market video to find a long that we could go into to balance out the positions that we had. So let's take a look at what that looks like. So before we had this CTVA trade, that was a long put, and then a Starbucks trade that was a long call. So Starbucks was relatively strong to the market, which is why we chose it, but today got a bit of a pullback ahead of the market. So it was leading the market on the way up, and then it's showing us, hey, it got a pullback. So it might be a tiny leading indicator that, hey, this market might pull back a little bit. But in any case, our long that was supposed to continue to go long didn't do that, but our long put would still went down. And so this is just barely imbalanced. But I added this pre-market NRG trade. So you can see that combined total, we're still up in these three positions. So this is how professionals manage their trades. We don't manage individual positions. We manage an entire portfolio together. And overall, as long as the portfolio is making money, we're happy. We don't have to win on every trade. I can lose on half my trades. It doesn't really matter. As long as everything is balanced out and net, I'm making money, I'm protected against large movements upwards or downwards, then everything is great. And that nice steady return is what we're looking after. So we added this NRG trade. The reason why I chose NRG is because of this nice history of smooth, steady movement upward. And then recently it got a lot more sharp or a lot stronger, but the overall markets have been really strong as well. So we decided to go into this NRG trade. So balance everything out. Hopefully you got a chance to balance out your portfolio today after the suggestion this morning, or at the very least get out of all your positions and flatten everything out or hedge the positions that you wanted to keep. Next week, again, it's going to be choppy. I'm not going to read into anything. I'm not going to entirely trust any moves unless it comes with volume and conviction. So a large bar, a large volume bar, then I might trust it because we do still have some earnings. We still have some earnings next week, which is terrible timing in terms of whoever is making the earnings announcements. But we do have, so in the US, we do have a small handful, about 40 stocks announcing. Some of them are pretty large. Autodesk, Agilent, Abercrombie & Fitch. So we do have some American Eagle Outfitters. We do have some retailers still coming out. Let's see what else. John Deere, so more of a staples, industrials, machinery related to agriculture, and a couple more. HPQ, some restaurants here, Key Corp or Keysight. I always get Key and Keys mixed up. We've got the Lowe's Company, so home improvement. So we do have some pretty significant Zoom, some pretty significant companies that are reporting next week into low participation, high volatility. So whatever move that they might make off of their earnings announcements, it might become an outsized move. So normally I do like to do earnings trades. It's actually one of my favorite trades to do. I know most people tell you don't trade earnings, it's too volatile, you don't know what's going to happen. Well, that's only true if you don't know how to trade them, right? You don't know how to protect yourself. But in this case, next week, I'm not going to trade earnings at all because of the low liquidity. It just the potential for an outsized move is way too large. So I would stay away from earnings, watch what happens because of earnings. But again, don't trust any move. If we start breaking out to the upside, don't get too excited unless we have really strong volume bars and a large momentum, a large range within the day. I'm really going to be paying attention to volume, especially. So let's just take a look. I'm just curious. I have no idea what the answer is, but I'm curious to see what the volume looked like last November. Here, if we look in last November, okay, right over, so it looks like over in this period, you can see how low these bars are compared to that moving average. See that? And then the price action over here during that week, you see that gaps are common. All right, so don't get too excited next week if that happens, and don't read any direction into it. Let's just look at one more year back, November, right here. Okay, you see that throughout this entire period, volume was low. The entire month last year was very low. But here we did not get as many gaps, but we got very low range, like did barely moved, right? So that's the other possibility. We get gaps. If we move, it's very gappy, very choppy, or we just have low volatility. All we do is sit here and not do much and consolidate. So either way, it could happen based on what's been happening so far. Maybe we'll just expect more chop sideways in this very low range move. But if we do get moves in either direction, or we do start to see larger ranges, we're not going to get too excited unless it comes with momentum and direction. Okay? So other than that, hopefully you got into your balanced positions going into next week. Have a wonderful weekend, and I will still be doing pre and post market sessions Monday, Tuesday, Wednesday, maybe not Friday. The market's closed on Thursday anyways, but I will still be here watching the markets Monday through Wednesday. And so if you're available, I will see you next week. Have a wonderful weekend.